This program provides education, not advice. Sponsors pay a fee for endorsements and interviews. See the truthayf.com disclosure page for details.
This is where technology, innovation, and personal finance come together.
This is the truth about your future with Rick Edelman.
Electricity, a big idea that's inspired countless new ones. From powering the light bulb to virtually powering our entire lives. 30 years ago, State Street launched the Spider S&P 500 ETF, SPY. A big idea that inspired the world to invest differently, and still does. What can you do with SPY?
Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit ssga.com for a prospectus containing this and other information. Read it carefully before investing. SPY is subject to risks similar to those of stocks. All ETFs are subject to risk, including possible loss of principal. Alps Distributors, Inc. Distributor.
It's Tuesday, August 27th. There's a fundamental question I've been asking you for years on this program, and I'm going to ask it again. And the reason I'm going to ask it is because I think for the very first time, I'm going to definitively answer it for you as well. Not that the answer is mine. The answer comes from research that has just been generated. Here's the question. Does it pay to go to college? Well, that question has been posed very often, and we've all become rather cynical, haven't we? This is why college enrollment is at a 10-year low. It's why so many people argue that going to college really doesn't provide the payoff because of the incredible expense. We know how upset so many Americans are with the amount of their student loan debt and the fact that they're not enjoying the financial rewards of that college degree, let alone assuming that they've gotten the degree and didn't drop out along the way. While they're no degree, they're still saddled with the debt. It's a big political issue, too, as the Biden administration has been trying to pay off everybody's student loan debts. The court, for the third time, rejected the plan. Nevertheless, the president has waived about $8 billion worth of student loan debts so far. Anyway, the question, does college pay off? Well, there's a new report that has just done an amazing analysis of this. The report takes a look at the cost of college, compares the degrees to the incomes you earn from the degree. In other words, what is the lifetime income from the field you're able to work in thanks to your degree, minus the cost of going to college, not just the money, but the time associated with it. And they did this for 53,000 college degrees. So pretty comprehensive study, and here is what they discovered. Nearly a quarter of bachelor's degrees have a negative ROI, a negative return on investment, meaning you spend more to get the degree in time and money than you get back in increased income. 43%. So nearly a quarter of bachelor's degrees are a bad deal. 43% of associate degrees have a negative ROI, and 50% of master's degrees fail to pay off. The median return for a bachelor's degree is about $160,000, meaning if you go to college, you get a degree, the typical degree will pay you about $160,000 of lifetime benefit, lifetime earnings above and beyond what you would get in a career that didn't require college. Now, that's the median, meaning half of them you get even less than that. The other half you get more, and we know what those are. The highest returns, go get a degree in engineering, computer science, nursing, or economics. I don't think any of us would be terribly surprised at engineering, science, or economics. I'm excited to see nursing. But wait a minute, a certificate in the technical trades has a higher payoff than most bachelor's degrees. In other words, go become an automotive mechanic. Go get involved in HVAC. Go become a plumber or a carpenter or an electrician. You will end up better off financially than if you went to college. And a 2 years associate's degree in liberal arts, 0 ROI. Total waste of time. And masters, as I said, nearly half of all master's degrees leave you financially worse off. Of course, the best, law, medicine, and dentistry. You have an ROI of $1 million or more in those fields. And here's the worst part of all. Not only do a quarter of bachelor's degree programs have a negative ROI, a third of all college students are pursuing degrees that have a negative ROI. So 1 out of 3 college kids are wasting their time. And that includes the students who are going to college thanks to Pell Grants. Pell Grants are the federal support system that allows kids from low-income households to go to college who otherwise wouldn't be able to afford to do so. So the good news is kids from low-income households are able to go to college. Problem is, they're getting degrees in fields that are not going to generate a good economic outcome. I think we need to rethink our policy here. Let's for sure encourage kids to go to college, but let's make sure they're studying to get a degree that's going to have an economic outcome that is desirable. And if the degree can't produce that, well, then let's simply lower the cost of the degree. I'm not suggesting you don't get the degree in that field. I'm suggesting we don't charge as much for it. Some big policy changes needed in order to make college reasonable. Stay tuned. Coming up next here on the podcast, one of the questions that I got from a listener here to the podcast.
Invesco QQQ is a proud sponsor of The Truth About Your Future with Rick Edelman. Want to rethink what's possible? How about being an investor, not just in your future, but the future? Well, it all starts with Invesco QQQ. For more than 25 years, this single ETF has given investors a direct line to the NASDAQ 100. That's 100 leading innovators behind advances in personal tech, science, and robotics, just to name a few. And you can access it all with Invesco QQQ. Let's rethink possibility. There are risks when investing in ETFs, including possible loss of money. ETF risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 Index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for prospectus containing this information. Read it carefully before investing. Invesco Distributors, Inc.
Welcome back. The Truth About Your Future continues. Got a question from Solon. He's a financial advisor from Pennsylvania.
Listening to your podcast on stablecoins, I'm assuming there aren't any regulations yet requiring that the collateral be managed, like SEC Rule 2A-7 does for money market funds. Does Tether, USDC, and the other stablecoins disclose their collateral holdings? We don't want a situation like we did with banks when they mismatched their assets and liabilities, nor do we ever want to see a run on a stable coin.
Solon, you're absolutely right. Your suspicions are correct. There are no rules governing stablecoins, and that's why we've seen the scandals we've seen. Remember Terra Luna a few years ago, which led to the crypto winter that we've recently emerged from? This is why stablecoin legislation is essential, and it's also why stablecoin legislation is likely to be the first of the new crypto laws that Congress passes, because stablecoins are a big deal thing. Unlike Bitcoin, where people are buying to make money, stablecoins people are buying to store their money, and they treat it like U.S. Treasuries. They want it safe, they want it liquid, and they aren't terribly concerned about the return. They're more interested in the safety and liquidity. We need to make sure the stablecoins are delivering on that fact, and there are no rules that require how they operate. So it's easy for Congress to create this law because we aren't dealing with the profit motive. It's also urgent because these things are holding almost $200 billion in assets. So a lot of people's money's at risk if these things blow up like Terra Luna did. So yeah, you're exactly correct. And I am hopeful that we're going to see stablecoin legislation before too long. You can send me your question as well. Just send it to askrick@thetruthayf.com. The link is in the show notes. Hey, I want to tell you about a webinar we have coming up. This is all about the new coming interest rate cuts from the Federal Reserve. Everybody's expecting those rate cuts to occur soon, and we are now entering a fundamentally different economic environment than we've had in recent years. For the first time in years, interest rates will be coming down. So are you ready to seize the best investment opportunities in this evolving market? If you're a financial advisor, are you ready for the adjustments to your client portfolios you might want to make? The seminar is going to be on Wednesday, September 11th at 1 p.m. Eastern. I'm going to be joined by Jerome Schneider from PIMCO, the world's largest bond fund manager. And we're going to talk with you about how to adjust client portfolios, figuring out how much cash you ought to have in your account, and a deep dive into the new fixed income opportunities. It's going to be a really fun and informative webinar Wednesday, September 11th. Register now for free. The link's in the show notes. If you're an advisor, you get 1 CE credit. I hope to see you there. I'm glad you're with me here on The Truth About Your Future. If you like what you're hearing, be sure to follow and subscribe to the show wherever you get your podcasts, Apple, Spotify, YouTube. And remember, leave a review on Apple Podcasts. I read them all. Never miss an episode of The Truth About Your Future. Follow and subscribe on your favorite podcast app. I'll see you tomorrow.
Increased awareness and actionable intelligence about the forces that are shaping our world.
This is The Truth About Your Future with Rick Edelman.